Gentlemen, in this video, I'm going to be looking at the Chinese economy and what machine learning can tell us about it. Now, I've been seeing a lot of really nasty headlines coming out of China, and let's just take a moment and read some of these. China's economy appears to be stalling, threatening to drag down global growth. Beijing orders stress test as fears of Russia-style sanctions mount. This is interesting. The developers that missed the deadline to file their annual reports include China Yuan Group, which said COVID-19 restrictions were the reason for the delay, and Sunac China Holdings, whose liquidity troubles have mounted in recent months. Auditors have also resigned from multiple developers, leading some of them to release unaudited results. When auditors are resigning from projects, you know there might be something going on with these projects, like maybe they're trying to cook the books. Vanke is one of the developers that has come into the realization that historical real estate boom that lasted for more than 2 decades is over, say property analysts, and that the market could get worse before it gets better. More than 10 Chinese property firms have defaulted on their dollar debt since last year. I mean, you don't hear a lot of this stuff. As property downturn drags on, Chinese developers see an uncertain future. The country's top 100 real estate developers experienced a 53% decline in sales in March. 53% from the same month a year ago, according to the data from China Real Estate Information Corp. It marked the 9th consecutive month of declines as the steepest for the industry since the downturn last summer. Last week, 24 Chinese real estate companies whose shares trade on the Hong Kong failed to file audited financial statements for 2021, according to data compiled by credit sites Nomura and a review of exchange filings. These developers that managed to do so painted a sober picture of their challenges. Really challenging times in the Chinese economy, and especially in real estate, since it's such a big piece of the economy. Now, I thought, let's see if machine learning really confirms these things. Can we build some models that really look at long-term Chinese economy? Because the Chinese economy is the second biggest economy in the world, second only to United States. If they go down, United States is going to have a hard time. So let's take a look at what machine learning can tell us. So what I did was I decided to build several machine learning models to try to predict the Chinese economy. And there's the symbol. It's kind of like the Chinese S&P 500. This is the target that I wanted to model. Something similar to the S&P 500 in the United States. Inside each one of these models, I decided to put technical analysis, and this is all the traditional things that you know, moving averages, stochastics, Bollingers, geopolitical data, commitment of traders. Commitment of traders, for those of you who are unfamiliar, it is basically hedge fund positions, and are they going long, are they going short, what's their net position? This is very predictive data. Commodities from around the world, indices, equities, currencies, bonds, mobility from Google and Apple. How are people moving around the world? Shipping and shipping delays, port queues, news from 149 different news suppliers, fundamentals, interest rates, and even I put some of the top cryptocurrencies in there because I didn't want to miss anything. What did we find? Obviously, machine learning agrees with these headlines that in this one 30-day model that I'm looking at, and I'm going to show you a longer term one in a minute, downside pressure. There is downside pressure on the Chinese economy, and that does not bode well for the US economy. This is an average of several different machine learning models looking at this Chinese S&P 500. And even out until August, you can see continued downside pressure. What does this mean for the US economy? This means that this will likely put pressure on the US S&P 500, when the second biggest economy in the world is struggling. Not to mention the war with Ukraine, not to mention these COVID lockdowns that are happening in China, downturn, huge downturn in real estate. And I think the part that really got me was these auditors resigning from all of these companies. That just really showed me that, auditors don't resign unless they have found something that they don't like. I think there's some pretty big hits that we're going to take, and this was just an interesting kind of experiment. Let's keep the video at that. Thank you very much for listening, everybody. Talk to you all soon.